Have you ever looked at a house in Sydney or Melbourne and thought, how on earth can anyone afford that? You're not alone. For decades, Australian property has seemed like a one-way bet, a guaranteed path to wealth. But what if I told you that this incredible boom, this national obsession, is built on a foundation that's starting to crack? What if the dream of homeownership is about to become a nightmare for millions? For over 20 years, the story has been the same. Prices only go up. Even when the world was in crisis, like during the 2008 financial meltdown, Australian housing barely flinched. It defied gravity, fueled by a unique mix of factors. We had a massive mining boom pouring money into the economy, high immigration rates creating constant demand, and government policies like negative gearing and capital gains tax discounts that essentially rewarded property speculation. It was a perfect storm, making investors rich and turning ordinary homeowners into millionaires on paper. At the heart of it all were the banks, and one key player, the Reserve Bank of Australia. For years, they kept interest rates at historic lows. Cheap money flooded the market, making it incredibly easy to borrow huge sums. The fear of missing out, or FOMO, took over. People weren't just buying homes to live in. They were buying them because they were afraid they'd be priced out forever if they did UNT. This created a self-fulfilling prophecy. Everyone believed prices would rise, so they borrowed more, which pushed prices even higher. It was a classic speculative bubble, but this time, it was happening in our own backyards. But then, the music started to change. Around late 2021, a new word entered our daily vocabulary: inflation. The cost of everything started to climb, and central banks around the world had to act. The Reserve Bank of Australia began one of the most aggressive series of interest rate hikes in its history. That cheap money that had fueled the boom for so long suddenly became very, very expensive. For a household that had borrowed $1 million, a few percentage points meant thousands of extra dollars on their mortgage repayments each month. This is where the cracks really start to show. Let's look at the numbers, because they are truly shocking. Australia now has one of the highest household debt-to-income ratios in the world. For every dollar an average household earns, it owes nearly $2. Think about that. We are more indebted than ever before, and now, the cost of that debt is skyrocketing. Many homeowners who bought at the peak of the market are now facing a terrifying situation known as mortgage stress, where more than 30% of their pre-tax income is just going towards their home loan. For some, it's 50 or even 60%. It's a financial cliff, and hundreds of thousands of families are teetering on the edge. Attempts to fix this have been, to put it mildly, ineffective. The government has offered various first-home buyer grants, but these often just add more fuel to the fire, pushing prices up even further. They've talked about increasing housing supply, which is a long-term solution, but it does nothing to help the people struggling right now. It feels like trying to put out a forest fire with a garden hose. The fundamental problem that house prices are completely disconnected from average wages hasn't been solved. The bubble has been stretched to its absolute limit. So what happens now? While no one has a crystal ball, the warning signs are all there. We're seeing a rise in distressed listings, where people are forced to sell because they can no longer afford the repayments. The number of people falling behind on their mortgages is climbing. This is the classic beginning of a housing correction. Unlike 2008, Australia isn't insulated this time. Our economy is slowing, and we don't have a mining boom to save us. The very pillars that held up the market for so long are crumbling. Here are the 3 key things to remember. First, Australia's property market became a speculative bubble, driven by cheap debt and a fear of missing out, not by economic fundamentals. Second, the rapid rise in interest rates has turned this cheap debt into a financial time bomb for households, creating unprecedented levels of mortgage stress. And third, despite government efforts, the core issue of affordability remains unsolved, and the market is now more vulnerable than ever. The great Australian housing dream has, for many, turned into a source of immense anxiety. The question is no longer if the bubble will pop, but when, and how messy it will be. It's a stark reminder that what goes up can, and often does, come down. Thanks for watching. If you found this information valuable, consider subscribing for more deep dives into the economic issues that affect us all. Stay safe and stay informed.